What's going on, everyone? It is Paul, the 920 trader with 920 trading and trading decoded. This week we are going to talk about something that tends to be rather insidious for short-term traders, for actually traders. Whether you're a day trader, whether you are a swing trader, long-term trader, anything like that, folks, and that is bias. A bias, and particularly if you're an options trader, bias is a really, really horrible thing. But what is bias? So according to the definition of bias, it refers to a systematic deviation from rational thought or objective judgment. So it's all based in emotion, folks. That's what it is, folks. You're suspending what you are seeing. You're suspending belief. And you're just operating out of emotion because you think something should happen. You think that the market is going to go up, so the only thing that you're going to do is buy calls, or you think that the market is going to go down, so all you're going to do is buy puts. The problem with either one of those things is, number one, it's really bad for your account. But number two, if you have a call bias, what essentially what's going to happen is you're not going to take the other side of the trade. So if the market is saying puts, but you're thinking, it's calls. It has to be calls. There's no way that this thing can go down. You miss out on the opportunity the other way. And the same is true for the other direction. You just miss the other side, or the correct side of the trade. So I have this actually happened to me. It happened to me several months ago. The bonds, I think it was a 30-year bond. 30-year bond came out. It was a bond auction that came out, and the bond rates were higher than they were the previous month. So when the bond rates come in higher, you would think that money flows out of the equities and into the bond market, because the bond market is generally it's a safer bet than the equities, and it's an inverse relationship between the two. When bonds are high, equities go down, and the other way also. So I was thinking, okay, the money has to pour out of equities and it has to pour into bonds. So guess what? It's got to go down. It's just got to go down. It's got to go down. I took a short position, and it went against me. And smartly, I closed out of that position, because, obviously you predefine your risk before you ever put on the play. If you don't predefine that risk, you're going to get hurt. So what did it do? And I was thinking, there's just absolutely no way this thing can continue to go up. And it did. It ran up $6 that day. And this was a few months ago. So that was a bias. Now, the biggest example of bias that I can come up with personally from my own trading journey, this happened February 22nd, 2022. And if you look back historically, what was special about this day in the world, again, February 22nd, 2022. Go back and look at the date. It was 22nd or 24th. It was February 24th, 2022. It was the day that Russia invaded Ukraine. So in pre-market, SPY just tanked. It ran down $6, $7, $8. So at the bell, everybody thought that the market was going to continue to go down. Well, think about this, folks. The market loves war. The market absolutely loves war. But if you have a bias that, well, it ran down $6 or $7 in pre-market and it's war, this is going to be really, really bad for everything, you would buy puts over and over and over and over and over again. I didn't. I was like, you know what? Let's see how this thing shakes out. Puts may be the play today, but ultimately, let's kind of see what happens. I went either 6 for 6 or 7 for 7 that day on calls. Now, here's the crazy thing. SPY ran up $18 that day. That was one of the biggest days in SPY history. Now, a couple of weeks ago, I think it was the 18th of December, we had a $20 drop. So that was the biggest day that I've ever seen, the $20. But before that, it was $18. I mean, that was a huge, huge, huge move. But there were people that were so biased by what was going on in the news that they said there's no way the market can go up. So the market go up a little bit, and they'd say, you know what, this is the place where it goes down. So they'd average into a position and average in and average in and average in, and by the end of the day, it run up $18, and they had this massive negative position, and that's a bias, folks. That's a bias. So we don't want to have obviously we don't want to have a bias. We don't want to have a bias because number one, we lose money, and we lose money quickly, and we're trading emotionally. Now, we're never going to be able to take the emotions out of trading, but what we can't do is we can't act emotionally. So we're emotional people by nature, but we can't trade emotionally. Okay, so but again, folks, you don't take the correct side of the trade, and if you don't take the correct side of the trade, which you should, you're going to lose money. So what do we do? So what's the antidote? What's the antidote for a bias? Number one, if you have a bias, you got to figure out why there's a bias. Why is there something in place? Why are you so bent on a call bias? Why does it have to go up? Why do you believe that it has to go up? Or consequently, why do you believe that it has to go down? Because it doesn't. It doesn't have to go up. It doesn't have to go down. The market's going to do something. We don't know what it's going to do. But again, bias, folks. It's really hard. Once you get a bias, it's kind of hard to get rid of it. But the question is, how do you get rid of it? Well, it all goes back to one thing, folks. It's the plan. What does your plan tell you to do? Does your plan say, I'm only going to buy calls or only buy puts? No, it doesn't. Your plan says, under these under these certain market conditions, I'm going to buy calls. And under these certain market conditions, I'm going to buy puts. Okay, that's how it works. That's how it has to work. So again, folks, it starts with your plan. Number one, it's got to be a written plan. Do you have a written plan? If you don't, you need one. You need to take the guesswork out of it, folks. We have to be I hate to use the word robotic, but that's what our plan is for. Our plan tells us what we are supposed to do specific to what the market is doing. Bottom line. So that's the biggest thing, folks, is have a plan, stick to the plan. Number one, other than sticking to your plan, when a trade goes against you, you must have predefined that risk before you ever put on the play. So that's going to get rid of that. It won't necessarily get rid of the bias, but it will keep your losses small. But if you truly have a bias, maybe take a couple of days off from trading and kind of reassess, why do you have the bias? It's just got to go up. It's just got to go down. Folks, it doesn't have to do either one of those things. But, it all comes down to having a plan and sticking to that plan with whatever happens. Winning trade, losing trade, it doesn't matter. It truly does not matter if an individual trade is a profitable trade or an unprofitable trade. It just doesn't matter, folks. But it's all about the plan. So bias, folks, bias is a horrible thing. It's a really, really bad thing. I've had short periods of bias before, but nothing, that lasted more than maybe a couple of hours. Kind of snapped to it and realized, okay, my thinking was maybe a little bit off. But yeah, get rid of that bias, folks. Get rid of that bias. If you find yourself in that position, one thing you can do, and I've talked about this before with other situations, get the biggest, fattest rubber band that you can find. Biggest, fattest rubber band, put it on your wrist. When you feel a bias coming on, I want you to grab that thing with your dominant hand, pull it back as far as you can, and let it rip, kind of snap you back into reality. Okay, listen, I'm starting to get a bias. You rip that thing and let it snap, and maybe it'll, again, bring you back. But anyway, folks, that's really all I have to say about a bias. If you have one, you got to get rid of it. You absolutely have to get rid of it. But again, folks, that is it for today. Do you guys know the thing? If you like our videos, please go ahead and give us a like and a subscribe. If leave us a comment, share, all those kind of good things, folks. If you're interested in the live daily trading, head on over to our live trading Discord. The link for that is down below. It's called Trading Decoded. First week is free. If you're interested in the 920 crossover strategy, 920trading.com, folks, 920trading.com. Now, this video right here, this goes in tandem with the newsletter. Newsletter comes out every Saturday. This comes out on the January 4th at 11 o'clock Eastern time. So the video and the newsletter come out at exactly the same time. So, hey, thank you for watching. I appreciate you guys very much. If you have any questions, feel free to just ask the question in the little box down below in the comments. I respond to each and every one of those things, folks. But anyway, I hope you're having a good New Year so far. It's 2025, folks. 2024 is in the rearview mirror. So it's time to take your trading to the next level. But anyway, I hope everybody has a great rest of the day. Have a great weekend. Happy New Year, folks. And as always, we will see you in the markets.